USD directional bias. Monthly time frame, we got ranging. So we're in a ranging market, but I put bearish in parentheses, and I'll tell you why. The weekly time frame, bearish. Daily time frame, bearish. In H4, we have bearish. Yep, it's looking bearish for USD. Let's get to these charts. If you stick around to the end, I don't normally give signals, but I'll let you know what I would do for USD, how it stands right now. All right, let's get to the charts. All right, we got USD. Like I said, the monthly time frame is still ranging. It's been ranging since 2017, 2016. But for me, I would consider it to be bearish, right? And here's why. Let me take this off a little bit. Matter of fact, I'm gonna leave it right there. But so this month is March. It's March 12th right now. Last month, February, closed out extremely bearish, right? It's going extremely bearish. This random blue line I drew right here, it protruded it, closed past it, and if you know your candlestick pattern, this is a bearish engulfing, right? So, and a bearish engulfing normally shoots for the downside. Not only that, but for me, I pulled out my fibs. Point A to point B. Just to kind of give myself a figure of where I think the market might go, right? But I say it again, I'm going to keep on saying it. We don't trade what we think, we trade what we see. So it's good to have projections, but at the end of the day, we're not entering on a monthly time frame. We're entering, some people enter on the 1 hour, 4 hour, 30 minutes, intraday swings. I don't know anybody that enters off the monthly. But this is a good projection to kind of just get it in the back of my head that alt USD might potentially break out of this consolidation zone. Now, it could do one of these numbers like it did here, but we don't know. We just got to prepare for it. We got to be reactive, right? So, like I said, monthly ranging, bearish. Let's go to the weekly. I'm going to delete this. Go to the weekly. All right, cool. Okay, so the weekly, I switched from bullish to bearish. And I did it because honestly, it's just extremely bearish to me. So initially, for the weekly, I had bullish because I saw this as a lower high that was broken. But it's very, very minor, right? Especially when you look at that monthly time frame and you see that lower high that was created, right? So this right here, this is a lower high. This is a lower high right here, right? A downtrend consists of lower highs and lower lows. That's how we identify a downtrend. So this lower high generation is normally a trader's first opportunity for a sell. It's on a monthly time frame, but it's normally that first opportunity, right? So for the weekly, I put bearish. This is a minor, very, very minor. At the end of the day, this is just 100% retracement. This pullback right here is just 100% retracement for Fibonacci. I'll pull it out so you can see it. But yeah, that's really all it is. So for me, weekly is definitely bearish, right? So the current volume is bearish as well. Weak pullbacks. This is probably a pullback on the lower time frame. I'll show you in a second. Let's see. Anything else? Nope. This is a clean downtrend. And if you want, you can even decide to when you draw counter trend lines, adjust them, because the fact that you see, if you leave this right here, you still will, you're going to think that this is pretty much a break of your counter trend line, which it is. But at the same time, if you know for a fact that this is 100% retracement and you're looking at the monthly time frame, which is a confluence, and it just created a lower high, then, adjust your counter trend lines. And counter trend lines are another thing that's, I would say per trader, or, just kind of just very subjective. It can be very subjective. But, higher time frame volume is very important. Don't go against higher time frame volume. Sometimes you can, but the majority of the time, just easier to go with the trend. But yeah, so we're at weekly bearish. So let's go to the daily. The daily is still bearish. It looks beautiful, clean. But we have to keep in mind the fact that where we are, right? You have to know where you are. We're at this price. This what's it? So 67248. 67248. This price has failed countless of times. So just be careful. Just be careful, because price can do some wild things right now. But yep, the first indication that price was on a bearish downturn was right here, right? So this is that choke, right? That change of character. I normally just say break of support, but some people know it as a choke. These two candles right here, these two bearish candles, that is when the market turned around and started creating lower highs, lower lows, lower highs, lower lows, and the trend changed, right? So that's it for the daily. Let's go to the H4. And the H4 is just as clean as ever. It's really, if you trade, you know that this is the pinnacle of a downtrend. I mean, it's just it's downtrending. Like, if you want me to draw some things, I can, but it's downtrending. It's downtrending, right? That's what we're doing. Lower highs and lower lows. Alright, so I'm going to leave that alone. If you stuck around to the end of the video, I got you, right? So this is going to get a little bit technical. I'm coming out my Trader 101 section slowly but surely. I'm trying to plan everything out, but let's go back to the monthly if you stuck around. Alright. So, as I said before, the monthly time frame is ranging, right? It's in a range that it has not broken since 2015. So keep that in mind when you're trading at this area. It's at a point where I feel like it's at an indecision level on a monthly, which is a very strong one. But I will say this. We identify a downtrend by the series of lower lows, lower highs and lower lows, and an uptrend by higher highs and higher lows. Until that most recent lower high is broken, then it's still on a downtrend, right? So until this is broken, this random blue line is broken, like this, it's still on a downtrend. It's downtrending until it's broken, until you see this lower high breaks. Okay. All right. Now, the way I would look at it's not UJ, AUD USD, sorry. The way I would look at AUD USD right now is it's downtrending, but it's at a range, right? So I'm gonna get off the monthly. Let's go to the weekly. I'm actually gonna delete some stuff because I'm getting a little claustrophobic. All right, this is how I look at the market. So I'm gonna draw point A to point B, 100% retracement on the weekly time frame, right? This is clean structure. I want to know what's going on, right? You want to know what the higher time frame volume is going towards. So monthly, bearish. Weekly, bearish. That's why I do this. This is exactly why I do this. You want to know what the higher time frame volume is. So monthly, weekly, daily. You want to know what that volume is because you don't want to trade against it when you're on the H4, H1. You know, depending on if you're a scalper or intraday or swing trader, you don't want to go against the higher time frame volume. All right. So I know the high time frame volume. So let's go towards daily. Same, bearish. I know what the higher time frame volume is, right? So for me, I'm going to hit one of these numbers. Let's see. 30.2. Cool. Right? So the market is downtrending right now. I'm waiting for the market to hit a floor, right? Because we don't get in on expansions, we get in on retracements, right? We get in on lower highs, at least for this downtrend. Uptrend, we get on higher lows. But you want to wait until the market, let's see, comes up to the 38.2, 50%, 61%, anywhere here, you know, right? You want the market to retrace, come back up, come down. This is your buying opportunity right here, right? Now, depending on whether it does it on the daily or the H4 is very important. This is what I call my structured time frame. Whatever time frame you did structure on, structure is just market structure, right? Whatever time frame you saw that bullish engulfing or that bearish engulfing for this sense. All right. So in a sense, we know where we are in the market. We know AUD USD is bearish on the monthly, weekly, daily, and H4. So essentially, we would just wait for a continuation, right? All we would have to do draw fibs, point A to point B, and this is for a continuation. Wait for the market to come up and test newfound resistance. It'll look something like this. Now it could be 38.2, 50%, 61.8, 78.6, all the way up to 100%. Now when it starts to break 100%, that's where that choke comes in, right? That change of character, that break of resistance, you know, to come do one of these. That's a whole change of character. And you can see it looks kind of like a inverted head and shoulders, right? But for a continuation, we're just looking for price to test one of these areas right here and to come back down. That's essentially all you have to do. So I will say currently it's at 23.6, and 23.6 is normally It's not. I wouldn't even consider it a price reversal zone. It's just it's a PRZ. Excuse me. It's an area where the price is just looking for some type of structure. Now, it could continue down from 23.6, and I would just consider that a continuation. I wouldn't even consider it a pullback. It's because it's so minor, you probably wouldn't even see it on a higher time frame. But appreciate y'all. Thanks for sticking around. If you like the videos, make sure you like and subscribe. Next, we got Euro USD coming up.